So, you've heard of crypto coins. But are you aware of their rise and fall? Do you know that they are pumped and dumped currencies? With stupid names? And no clear value. They are the graveyard of all currencies. On May 21st, Vanity Fair even gave them a name. The shit coins. The monthly pop culture magazine must have had a good reason for that. Half of these coins are legitimate and half are not. Most of them have been created without a real business model or purpose in mind. Even their names sound ridiculous. Ethereum, Binance, Tether, Cardano, Dogecoin, Ripple, Polkadot. They sound like your worst nightmares. Their premise is to play on people's anxieties, and prey on their fears and insecurities. They feed the beast within them with false promises of golden opportunities that turn into their worst ordeals. Think of it as a theater show, in which the entire internet is the stage, and the actors are there to pump up their performance just to make money and run off with the proceeds before an oblivious audience realizes they've been fooled by a den of thieves. And the same play repeats itself again and again, with the same authors, the same theatrical performances, and the same dumb audiences. Only the name of the currencies changes, while everything else stays the same. How many cons does it take for people to realize that most of the more successful coins are only prosperous just for a few hours before the dump takes place? How many times does the story have to repeat itself? The same coins rise by tens of millions of dollars in just a few hours, only to fall by tens of million hours later. Yet, people still invest in them. And there's one good reason for that. While their naming might be utterly ridiculous, if there's one thing true about them, it's that some people can actually get incredibly rich if they buy into a certain coin at the exact right time. That's all there's to it. The world is filled with people kicking themselves for failing to buy Bitcoin back in 2010. Had they purchased just $1 worth back then, when the price of a Bitcoin was nearly $0.003, that dollar would have netted them about 333.33 Bitcoins. If that tells you anything, is that there's a certain genius to the shitcoin market. An evil one, and a devilish one. It's not just the silly names, or the pump and dump nature of the game, or the ultra-high net worth scammers who manipulate the space. But every other aspect of the coins is meant to create the ultimate promise of extreme wealth. And the problem is, people still believe in it. Like zombies, they run after it. Like fools, they buy into it. And like religion, they pray for it. Watch this video to find out why cryptocurrencies are raising the alarm of becoming the necropolis of all currencies. I'm Michael Tafor, and this is my YouTube channel, El Dorado.
Over the past few months, the Bitcoin market rallied by hundreds of billions of dollars when Musk announced that Tesla would accept the cryptocurrency for car purchases. It then fell by almost 50% when Musk decided Tesla would not accept the coin. Some theorized that Musk's move was the ultimate pump and dump, as he was able to buy low and sell some of his holdings high. According to Vanity Fair, Tesla even admitted to selling about 10% of the Bitcoin Musk had purchased at its peak. Some people here in Australia have even made a fortune on Dogecoin, Musk's brainchild. According to Australia's ABC Science's latest report, the world of Dogecoin is a strange mix of people who bought the currency on a whim so long ago that they can't find their wallets. It is also made up of newcomers who are riding the hype and want to get rich quickly. Then, there are the others. They are the ones who are almost the opposite. They're there for the long haul and believe cryptocurrencies will change everything. And although their belief in the coin started as a joke, the currency is now worth tens of billions of dollars. These are stories of some of the people who got in early. However, there are horror stories as well as Cinderella stories. Perhaps the only reason people still chase these currencies is that they don't want to have their money in banks, which charge exuberant fees to keep their funds safe. They also don't want to be tied to a global financial system that has let them down. Not once, not twice, but 3 times in just a decade. A system that is flawed and prone to collapse any time now with all the magic money printing and the ensuing inflation. To them, cryptocurrency is like a detached farm that can subsist without reliance on the outside world. There they can grow carrots, they can raise cattle, and they can buy crypto, as long as they subsist and remain resilient. I tried to fathom the world of cryptocurrencies, but I found it dry and hard to understand. Also, it's purely based on a hunch. Sometimes, the hunch pays off. Sometimes it doesn't. As an example, the sudden rise of Dogecoin in early 2021 was a perfect storm of internet culture, gaming culture and crypto, says Jason Potts, a professor of economics at MIT University. People who invest in it are often young men entering the world of finance and speculating for the first time. They spend a lot of time online, learning about Doge through gaming or Reddit communities. These new young buyers want to get rich quickly. For many, the idea of slowly accumulating wealth makes no sense when the economy appears to be stacked against them. From the soaring cost of housing to stagnating wages to the difficulty of getting permanent work. There's a generational sense of the pointlessness of that pursuit and how long it takes. Yet, in a single week in January of this year, the Dogecoin subreddit jumped from a few thousand to 1 million users. And the number of posts exceeded 2,000 an hour. It really went nuts. But with such hype, the market followed. As the price of Dogecoin rose, more came. Months later, they're still coming. The only problem is that those young, first-time investors are overexcited. They could lose more than they can afford if the value of the coin falls sharply. And since its peak in May, the value has fallen by about half. According to CNBC, the price of Dogecoin fell sharply on the morning of Thursday, May the 13th, sliding below 40 cents per coin. That happened after Musk announced that Tesla was suspending the use of Bitcoin in payments over environmental concerns. The price rebounded above the 40-cent mark later that day. Musk, whose car company holds billions in Bitcoin, said he was concerned about the rapidly increasing use of fossil fuels for Bitcoin mining and transactions. The price of Bitcoin pulled back following the announcement. But let's face it, Dogecoin, which started as a joke nearly a decade ago, has risen to prominence this year. The price of the coin rose to above 70 cents earlier this month, according to Coinbase, ahead of Musk's appearance on NBC's Saturday Night Live. However, Dogecoin came under pressure once the show began, at one point falling below 50 cents, when Musk described the cryptocurrency as a hustle. The Tesla boss and self-proclaimed Dogefather made a joke on Saturday Night Live about the coin being a scam. That's where the problem with cryptocurrencies lies. A single tweet or statement, true or false, can decide the fortunes of speculators. This makes buying the coins like the spinning of a roulette wheel at an online casino. So, what's the long-term future for these coins? That's hard to say, says Australia's ABC News in its May 21st online report, given the value is purely psychological at this point. But as the shitcoins, the way Vanity Fair termed them, become more valuable, they may lose the veneer of amateurism and ironic mockery that made them popular in the first place. But is the Bitcoin plunge the beginning of the end for crypto? Experts seem to be more worried about fraud than cryptocurrency's future. On May 23, CoinDesk, an opinion news site specializing in Bitcoin and digital currencies, quoted the global head of digital assets at Goldman Sachs, saying the growing cryptocurrency space is only one big fraud away from a very negative impact on the market. Talking about risks to the industry, Matthew McDermott noted that inconsistent regulatory actions worldwide could impede the further development of the crypto space. He felt reassured, though, that large crypto companies have been managing their growth without any noticeable increase in fraudulent activity, and seemed encouraged about the industry. Goldman Sachs itself had been initially skeptical about cryptocurrency but overcame its doubts as demand for crypto-related investment products and services rose steadily among investors. Earlier this month, the investment banking giant announced in an internal memo that it had traded two kinds of Bitcoin-linked derivatives. It aimed to participate more heavily in the market by selectively onboarding crypto trading service providers. It also recently launched a platform that provides crypto news and pricing. In a March survey of 280 clients, Goldman Sachs' digital asset team found that 2 in 5 respondents had some exposure to cryptocurrency, while about 3 in 5 expected to increase their holdings over the next year. The group also found that the Chicago Mercantile Exchange's daily Bitcoin futures activity in April grew a massive 900% compared to the same period a year ago. But CoinDesk quoted McDermott saying that the firm is only just starting to offer access to the crypto space because of an uncertain regulatory landscape. He said that the firm was looking into offering lending structures in and around the crypto space to corporate clients as well as structured notes, and that it would offer access to cryptocurrencies, specifically Bitcoin, via a fund or structured note-like products for its wealth management clients. CoinDesk quoted him saying that institutions have become more comfortable with custodial risks that had previously frightened them. Custodial offerings are a lot more secure and execution and risk management have improved considerably, McDermott noted. Regarding environmental concerns that have recently played a role in sending cryptocurrency prices downward, McDermott was quoted by CoinDesk as saying that a number of potential investors have voiced concerns and are looking at improved sustainability options. He added, "Investors are intrigued to hear about miners leveraging renewable energy sources to mine crypto assets. And carbon-neutral funds are emerging that, for example, calculate the carbon cost of crypto mining and buy credits to offset their environmental impact." Yet still, cryptocurrencies are raising alarm. After observing the cryptocurrency market, without ever investing a dollar in it, my conclusion is that it's a great place to gamble, but a terrible place to invest. Here's why. To begin with, the basic premise of cryptocurrencies that there will only ever be a limited amount is simply not true. Bitcoin may have a finite number of coins mined, but other cryptocurrencies are popping up all the time. And some major ones, like Ethereum, have a potentially unlimited supply. The other reason is that cryptocurrencies have no intrinsic value, other than a place to park or hide money. It's only worth what someone is prepared to pay for it. In this, cryptocurrencies are the digital equivalent of gold, except that gold is useful in all sorts of things, such as electronics. The other thing about cryptocurrencies is that they can be lost, or could vanish, all too easily. Here's the proof. Earlier this year, the story of a Bitcoin owner went viral after he lost his wallet password and $220 million along with it. As it turns out, Stefan Thomas had 7,002 Bitcoins stored on a secure hard drive. According to an insider report, the secure hard drive, on which the Bitcoins were stored, was an iron key device. It gives owners 10 chances to guess their password before encrypting the contents. Thomas only had 2 attempts left to guess correctly before that situation occurred. The New York Times initially reported Thomas Plight and quoted him as saying, "I would just lay in bed and think about it, then I would go to the computer with some new strategy, and it wouldn't work, and I would be desperate again." On January 17th, the stash was worth about $220 million, but as Bitcoin prices surged this year, it had been valued above $240 million. These coins can be stolen, too. A number of holders have found that their vaults have been nicked and emptied by hackers. That's fine if you're criminal hiding money, but scary if it's your hard-earned savings that you've effectively buried in the Wild West. And in this Wild West, there are no marshals to protect you. Cryptocurrencies are ideal for laundering money. The US dollar is the criminal's friend too. But the authorities try to clamp down on money laundering via cash and currencies, but not so crypto. Once again, it's the Wild West, with a lot of unsavory characters roaming around. Another reason behind the alarm is the way cryptocurrencies are sold. It seems like those selling them are playing on the gullible and least informed, and inciting fear of missing out. Buyers are hoping that someone will be even more excited than them, and buy what they bought, at a higher price. That might be a short-term winning bet, but betting on excitement and emotions is a bad investment. The price of cars doesn't change 20% in a day because Elon Musk tweets on Tesla, but it does with cryptocurrencies. And if cryptocurrencies are real currencies, then why can't they be spent? As Sam Stubbs, the founder of Kiwi Saver Scheme Simplicity, said on May 23 in Stuff Opinion Analysis, very few things you can see, feel or touch can be bought with cryptocurrencies, and that's 12 years after Bitcoin came to be. Of the claimed 300,000 plus daily transactions in cryptocurrencies, very few are related to the consumption of anything useful. And Elon Musk, a famous booster of crypto, has just said you can no longer buy Tesla cars with it. Then there is the uncertainty of it all. Cryptocurrencies' values are subject to wild swings on rumors and personalities. The price of Bitcoin has dropped 80% in the past, a drop as big as we saw in the Great Depression. It's really up to you if you want to trade cryptocurrencies. But as the ancient Romans said, caveat emptor, let the buyer beware. Treat it like you would gambling. You could make a fortune, or lose all your money, and all for reasons beyond your control. But under no circumstances treat cryptocurrencies as an investment. They are simply not. So, what does the future hold for Bitcoins? According to the New Yorker May 24 online issue, the latest moves by China have exposed the vulnerability of the cryptocurrency. Other governments around the world are also cutting down on cryptocurrency mining. This leaves Musk as Bitcoin's biggest supporter, like it or not. But the issues facing the crypto market go well beyond Musk. According to the New Yorker, the Bitcoin boom faces two existential threats. On the one hand, there's the tightening of monetary policy by the Federal Reserve, and on the other a legal crackdown by the Chinese and other governments to protect their own currencies. The prospect of a Fed shift could cause the price of Bitcoin to fall a lot farther. The specter of concerted government action to restrict the trading and use of Bitcoin is potentially even more perilous. It brings into question the long-term viability of the digital currency. However, those who wrote the story of Bitcoin still believe the currency is the new gold. They describe it as an asset that provides a valuable hedge against a fall in the stock market. But as Bitcoin plunged a couple of weeks ago, the price of gold rose. So, where does this leave us? Even now, long-term holders of Bitcoin are sitting on large profits, and some optimists insist that the value will rebound and reach new highs as more and more institutional investors accept crypto as a legitimate asset class. Last week, its proponents reiterated that the price could reach $500,000. These are not firm predictions, though. Early last week, 3 state-run Chinese financial agencies warned Chinese banks not to provide their customers with any Bitcoin-related services. The United States and other Western countries haven't yet gone as far, but their governments aren't standing idle, either. Earlier this year, Janet Yellen, the Treasury Secretary, described Bitcoin as an extremely inefficient way of conducting transactions and pointed out that it is used often for illicit finance. In India, where investing in Bitcoin has become popular, reports say the government is preparing to ban people from owning digital currency. Ray Dalio, the founder of Bridgewater Associates, the world's biggest hedge fund, suggested that even the US government could outlaw Bitcoin to protect its monopoly on the supply of money. Even with Musk's support and pledge of allegiance to Bitcoin, fighting the feds could prove to be very costly for everyone. As American computer scientist Paul Graham once put it, "I am very intrigued by Bitcoin. It has all the signs. Paradigm shift, hackers love it, yet it's derided as a toy. Just like microcomputers,